That was a brutal, awful, terrible week on Wall Street. I'm here with my colleague at 76 Research. I'm Trish Regan. This is Rob Hordon. Rob, good to see you. We've talked a lot over the last 48 hours or so. Wow. So down nearly 6% basically on almost all the indices, to which, look, we're going to talk all about the reasons why and what's good, what's bad, good, bad, and the ugly, shall we say, on these tariffs. But I still think it's the moral of the story here is this is a rare opportunity in that we have such extreme volatility. It kind of reminds me of what we saw in March 2020. And here we are in, it's April now, but 5 years later. And this is kind of this like self-imposed, self-induced, rather destructive period in the markets, to which I just say, and before we get into all the bad news, like, heck, you know what? Like, I may not see another opportunity where I can buy some of these tech companies that I love and believe in and really fundamentally think are a huge part of the future. I may not be able to buy them again at these valuations for a while. So I'm all in. I'm buying. You know that. We put out a note on 76 Research on Friday, just sort of emphasizing that if you have the time horizon, you want to have exposure to things like this, things within the tech sector and some of the specific names we mentioned.
Yeah, absolutely. It's obviously a very turbulent period, and it was a vicious drawdown after Wednesday, Liberation Day. So Thursday and Friday were very nasty. Markets are way off their highs that were just achieved, all-time highs that were just achieved about 6-7 weeks ago on February 19th, of this year, which, as we pointed out, happened to be the same high point for stocks 5 years ago before COVID hit. So the S&P is down a full 17% since then, which, by the way, is like halfway the distance that it fell in 5 years ago which
is about 35% that we were down.
Yeah, we were down 34%. Exactly. Okay. So we're literally halfway to that level. The Nasdaq's down something like 21.5% from highs in early February or mid-February. So yeah, it's been a very rocky, volatile period, no doubt. But I think, from an investment point of view, these are always interesting moments, right? I mean, these are opportunities where you've got a lot of sellers, you've got people who are forced sellers due to liquidity, you've got panic sellers, a lot of uncertainty. So it's very uncomfortable, if you're invested, but it's also sort of an opportunity to establish positions, take a long-term view, kind of go bargain hunting, when there's blood in the streets, as they always say.
Blood in the streets. I mean, Look, I think it's a question of, our investors overreacting. There are a lot of people that feel we have just edged closer to a recession. You look at, for example, the poly market odds that you and I have both been sending back and forth to each other. And yes, the odds of recession are creeping higher. I think there were odds of a recession happening in part just because of the sort of cyclical nature and just what was going on in general ahead of this. But this may have been sort of the tipping point. And what Donald Trump is trying to do, while commendable in some ways, and don't get me wrong, like I've argued exactly the same thing, which is that we need to do a better job at looking out for the industries that we can really thrive in, and high-tech manufacturing is part of that. And I don't think that we've done much, on either side, frankly, politically, to help defend, if you would, the American worker against the onslaught of cheaper labor, et cetera. Yet simultaneously, you also have to recognize, okay, where are our strengths, where are our weaknesses, and is a trade deficit really the same as a tariff? And I think that that's sort of, when you get at that granular level, perhaps what some people are missing, including the media for that matter, because they don't understand any of this. I'm sorry, but they can barely understand when the Fed moves. And I know this because I've worked in mainstream media, and I get all excited, like on Fed Day. I'm like, whoa, the Fed's going to do this, the Fed's going to do that. And people were like, Like there was no producer that wanted to get Trish and the Fed story on any given day. Trust me. So they don't know. They really don't understand live or breathe economic policy to begin with. And all they see is all the bleeding on Wall Street. And they're like, we told you so, we told you so, we told you so. It's all Donald Trump's fault. So before we jump on that bandwagon, and look, he and his team are not blameless here. I think they could have done a better job on their math and done a better job in how the rollout was communicated to Wall Street. I think that they're going to have to kind of dress this puppy up a little bit, because they've got to sort of explain to people what their real intentions are, which may be just to have a negotiating phase, and he wants to get a few wins out of this. But yet simultaneously, Rob, I'm going to play you a soundbite, and the viewers that are watching, this is our little channel. Make sure you subscribe, by the way, to 76 Research here on YouTube. Make sure that you go to 76 Research and you sign up for our newsletters. It's $1 a month for the first 2 months. Use code word dollar. But let me play you Donald Trump. This is from a few decades ago. Here he is talking on Oprah Winfrey's show about, well, exactly what he wanted to do. Like, this shouldn't be a surprise to people. Here we go.
Last year criticizing U.S. foreign policy. What would you do differently, Donald?
I'd make our allies, forgetting about the enemies you can't talk to so easily, I'd make our allies pay their fair share. We're a debtor nation. Something's going to happen over the next number of years with this country, because you can't keep going on losing $200 billion, and yet we let Japan come in and dump everything right into our markets and everything. It's not free trade. If you ever go to Japan right now and try to sell something, forget about it, Oprah. Just forget about it. It's almost impossible. They don't have laws against it. They just make it impossible. They come over here, they sell their cars, their VCRs, they knock the hell out of our companies. And hey, I have tremendous respect for the Japanese people. I mean, you can respect somebody that's beating the hell out of you, but they are beating the hell out of this country. Kuwait, they live like kings. The poorest person in Kuwait, they live like kings. And yet they're not paying. We make it possible for them to sell their oil. Why aren't they paying us 25% of what they're making? It's a joke.
This sounds like political presidential talk to me, and I know people have talked to you about whether or not you want to run. Would you ever?
Probably not, but I do get tired of seeing the country ripped off.
Why would you not?
I just don't think I really have the inclination to do it. I love what I'm doing. I really like it.
Also, it doesn't pay as well.
No, it doesn't. But, I just probably wouldn't do it, Oprah. I probably wouldn't, but I do get tired of seeing what's happening with this country. And if it got so bad, I would never want to rule it out totally, because I really am tired of seeing what's happening with this country, how we're really making other people live like kings, and we're not.
What do you think of this year's presidential race, the way it's shaping up?
Well, it's going to be very interesting. I think that probably George Bush has an advantage in terms of the election. I think that probably people would say that he's got like that little edge in terms of the incumbency, et cetera, et cetera. But I think Jesse Jackson's done himself very proud. I think Michael Dukakis has done one hell of a job. And George Bush has done a hell of a job. They all went in there sort of as semi-underdogs, including George Bush, and they've all come out. I think people that are around all three of those candidates can be very proud of the jobs they've done.
You've said, though, that if you did run for president, you believe you'd win.
Well, I don't know. I think I'd win. I tell you what, I wouldn't go in to lose. I've never gone in to lose in my life. And if I did decide to do it, I think I'd be inclined. I would say that I would have a hell of a chance of winning, because I think people, I don't know how your audience feels, but I think people are tired of seeing the United States ripped off. And I can't promise you everything, but I can tell you one thing. This country would make one hell of a lot of money from those people that for 25 years have taken advantage. It wouldn't be the way it's been, believe me.
Okay, so, fast forward to present day, and he's coming back for a second time around. And he's like, I mean it. Like, I've believed this for a long time, and I want to rectify the situation. So now we got to roll up our sleeves, right? And say, well, is that really the best way? So part of the problem, I believe, Rob, and I have a feeling you do too, is that there are these like terms that are thrown around that the mainstream media doesn't understand. And frankly, like most of America doesn't get it either, because it sounds good to say, oh, it's not fair. They're eating our lunch, blah, blah, blah. And you know where I stand. I'm very pro-American worker. I want to make sure that we do protect American jobs. But simultaneously, you also have to recognize trade deficits and tariffs are kind of two different things. Like, I think a lot of people on Wall Street thought, okay, they're going to roll out the tariffs. And they thought maybe it was going to be a 10% tariff, which is effectively a tax on every country, and it would be kind of equal. And if it wasn't that, it was going to be, okay, well, hey, if you're charging us 25%, we're going to charge you 25%. And so they thought it was going to be an apples to apples thing, tariff to tariff. But what actually happened was something entirely different, right? So they came up with some math, somehow, maybe Peter Navarro, who was a long time near communist, frankly, I mean, at UC Berkeley. And Peter, I'm not going to take anything away from him. The guy went to prison. He didn't need to. He could have testified he was being asked to, but he wound up going to prison over refusal to testify before Congress. So he's taken his own share of challenges. But Peter has sort of a different view on all of this. And I don't know how much is Trump's view, because I know that Donald Trump just wants America to succeed. The problem with the way this got rolled out is that America can't succeed with this sort of set of facts. Now, this may just be first bite at the apple, right? I mean, and Scott Bessent kept saying that on Bloomberg and on Tucker and on CNN. He's like, no. Like, this is just our first round, right? This is just a negotiation. So fine, it's a negotiation, but you better start negotiating kind of soon, because again, I'm looking at wild numbers in the S&P and NASDAQ, and before anybody says, oh, it's just Wall Street, buy. It's probably a good idea to buy in this environment. But before you just say it's Wall Street, like, Wall Street does catch up to Main Street. Like, it is the financial engine that powers everything. So with all that in mind, your reaction to what Donald Trump has said for years, which I'm not going to discredit, like, I think actually there's some merit there. I just wonder if in this particular case they took it too far. Yeah.
So, it's interesting. Well, he's certainly not a Johnny-come-lately to this thought process or this issue. He's been invested in it and thinking about it for decades. I think take a step back. Wednesday, we had Liberation Day and the announcement, and actually the market was up on Wednesday a little bit. Yeah. People were getting a little optimistic going into that. Even in the first 10 minutes, I think, of the press conference, kind of aftermarket stocks were going up a little bit. And then they kind of trotted out that graphic or that table that showed the very large, their definition of reciprocal tariffs with very, very high numbers. And that's what has just taken everyone, that's sort of what shocked the market. They're using a concept of reciprocity that, as you pointed out, is based on the bilateral trade deficit, the individual trade deficit we might have with a country like Vietnam or Korea. And the tariffs are being set on that at very high levels. And that's what has investors around the world nervous, because these are such high levels of tariffs that in a way it threatens to shut down international trade entirely with, these countries. Mm-hmm. I mean, if I'm in the market for a Toyota Tacoma pickup truck, I'm not going to pay a 50% premium for it, right? So it's like the tariffs are so extreme. It's almost like when you think about taxes generally, if we had 95% income tax rates, no one would work, so it can have a very chilling effect on economic activity in general. And that's where we get these concepts of we're looking at a potential recession, and, markets are earnings could collapse. So people are afraid of the consequences of these sort of more extreme tariffs actually being implemented. So the question is, will they be, or is it just
theater? Right. And that's where you kind of got to understand where Donald Trump is coming from. And I feel like I have a fairly decent read on him, and he wants the best thing for America. Like, he really, really, really does. And he wants the best thing for American workers. He doesn't want people to lose their life savings or their retirement savings in the stock market. I can guarantee you that. The intentions are good, even though, the left is going to try and paint this as something else entirely. He does want the best thing. So knowing that, I think that's, some saving grace there or whatever. He's not going to be able to stomach, I personally, right, is not going to want to keep seeing the market just go. Now, how much control over that he has at this point, it's really, amazingly, it is a fair amount of control he has, in that, he can affect a lot of things with a tweet, with a statement, with some optimism, with, okay, well, we're going to negotiate. We're going to negotiate here. I think the problem is for places like China, they took the bait, And so China's like, okay, now we're going, what was it, a 35 or 37% tariff? We're firing back. And it's like, oh, guys, he's just going to go nuclear on you. So none of that is fun.
Yeah.
But, I do think that for countries like Vietnam, for example, that's okay, well, we're going to be zero. Well, that's a win. Okay. So he can go through, I don't know, how many countries are there in the world? We don't have to count the penguins.
Yeah.
We're going to take them out. We're going to assume that they're going to go to zero. Okay, penguins. But in other words, you can basically go down the list and say, okay, 0, 0, 0, 0, win, 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 win. And he'll get all those green checks. And then he's going to be left with China and a few other holdouts. And fine, then you deal with those and you continue negotiating there. But I think overall, I mean, the market just sort of fell out of bed, and I think there's some real opportunities. I mean, we got a little bit of a discussion going on here. We see some familiar faces like TCC, Don Baca here. What's Up saying basically what's up is like in there buying. And I get it. Like I am too, actually. Full disclosure, like, people might say, oh, you're crazy, Trish. I can't time the bottom, but I know that this is a big downturn. And I'm pretty confident, because I'm not about to bet against America, that 5 to 10 years from now, we're going to be in a better situation than we are today, right? Or than we were on Friday. So sure, Don's saying it's going to go down further. Probably will. Like, this week, if he doesn't announce some deals, sure, it could totally go down lower. But let's look at some of these PE valuations. I'm looking here, the S&P the last couple of years. Rob, walk me through this graphic, because I look down at, we're not near 2023 levels, to be fair, but we're still like some of the froth that we saw in 24 is coming off the PE.
Yeah, in terms of the S&P, I mean, you can see like this is the forward number, and right, we're down a good 3 turns or so on the multiple, and we're kind of back closer to levels that were in 23. I think Trish, the even starker chart is really on the NASDAQ, because that's where we've seen kind of even more downside so far this year, or in the last few weeks.
Okay, I have that as well. Let's take a look. So here's that actually is, let me move the graphic for 76 Research out of the way. So this is actually more dramatic. You're absolutely right. And to be honest, what have I been buying but triple Qs, as well as some names in our American Resilience portfolio there, the one on the left, guys, because American Resilience is the one that has the most tech. But anyway, going back to what we're seeing here on the PE ratio of the NASDAQ the past 2 years, we're looking at a much more sort of potential, rich environment. We're not at the bottom, but it's getting close.
Yeah, look, I mean, the bottom, I went back and checked. You could see we're sort of down to like 23 times forward earnings. When we were last there it was at the end of October of 2023. And, since that time, if you bought the triple Qs, you're up 22% to today. And so this is even after, this nasty downturn, because our earnings have grown, and you were up like 55% just, as of mid-February when stocks peaked. So, just sort of, kind of making the point, like, we've really derated on a lot of these tech companies, and now you got to think about valuation, right? You got to think about, I mean, if you don't believe that we're headed towards an economic catastrophe, and you think these companies, which have pretty resilient earning streams in terms of these big tech companies, if you think that they can be sustained, we're at a point where a lot of
we're in that, and I don't mean to interrupt you, but names are coming to mind. I look at, for example, Amazon, right? And Amazon, you're trading around 15 times earnings now,
like
to your forward-looking earnings, right? Versus 35 that we were at. And so that looks more attractive, but yet simultaneously, hey, they get a lot of stuff coming from China, frankly, right? A lot of that product. So it makes sense that they're beaten down. I guess I would just say I don't think they're going to be beaten down forever. Like, I don't think Amazon's out of business because we're going to tariff China.
Right. And, and there's concern that a lot of the Mag 7, they do more business internationally than the average S&P 500 company. So maybe there'll be some retaliatory effects on them. But, do you believe they're going to grow earnings over time? I do. Right. I mean, they were very much priced for very substantial earnings growth. And that's why they were such valuable companies. And that's just been compressed to very, levels that are more associated with kind of, moribund, value stocks, right? Where,
Right.
there's not a lot of growth opportunity. So I think investors should, kind of think about the earning streams and take a long view. And what you have now, I think, particularly in the tech sector and accessible through indexes like the triple Qs, you're getting some great companies at compressed valuations after a pretty nasty downturn when you have a lot of sellers. So,
no, I think it's fair, and there's ways to even, for example, buy just the Mag 7, which have been so beaten down, and so whether you're in triple Qs or whether you are looking at something more specific, there's ETFs. FTEC, for example, that is kind of more, that Mag 7 is Fidelity overall ETF index. I mean, these are things that I think are worth having exposure to as we continue riding this down. And Don's making the view that he thinks PE should be even lower in his opinion. Okay, fine. But if you're taking the 5-year, 10-year view, then you can't time it. I mean, I gotta just remind people of that. That's why dollar cost averaging into the market is so important and so great, because you get all of the downturns as well as the upcycle. And I just, having been in this business for quite some time, and I think about what I went through when I first got into the business, right in the year 2000, and then I think about '08. And I think again about what we were, going through in 2020, and there were plenty of blips again on the way. In 2001 even, right? When we were facing what we faced there after 9/11, I think that you just kind of have to say, all right, I am a long-term believer in America. So when America's on sale, that's when I actually am getting in. And if you have that broad exposure, it's good. And if you don't have the broad exposure, or if you want to actually narrow it down and try and really outperform with some names, I mean, again, that's why I say go back and take a look at the portfolios we have at 76 Research. And specifically, if you're interested in long-term tech opportunities, you want to be looking at 10 to 15 stocks we have in the American Resilience portfolio. But volatility is the name of the game. And I suspect that this week will continue to be super volatile. One of the questions that keeps coming up in the conversation is Bitcoin. Now, one of the viewers, TCC, noticing that Bitcoin actually really kind of broke out in some ways away from tech. And this is I'm looking at the comments, and we've got kind of a split market here, where we got some people hating on Bitcoin and some people saying, this is fantastic, because it really seemed to show that it was a different valuation picture than the rest of the market. I thought that was really incredible. I got to tell you, my son, my little guy, who just is sort of absorbing a lot because he hangs out with me a good amount and he hears me, and he knows what I'm focused on and what I'm interested in, and he hears me talking to daddy, or he'll hear me on the phone with you. And so he gets in the car after school on Friday and he said, well, Mom, Bitcoin really kind of held up. And I looked at him and I thought, oh, all right, that's not bad for just a little guy noticing that. I'm impressed. But I mean, I had the same conversation maybe 10 minutes later with you, where we were talking about the amazing thing is that Bitcoin, you'd think it would fall out of bed and just crash, and it didn't. Why do you think Bitcoin is hanging on?
Yeah, it's interesting. So Bitcoin has been more or less correlated with the NASDAQ and kind of trading like a tech stock for much of this period. But in recent days, it's stabilized as, tech has continued to fall. Michael Saylor put out a tweet saying, Bitcoin has no tariffs. So I think it's interesting. It's being differentiated as a different asset class, a different type of investment. Look, if we are headed into a recession and a period of weakness, we are potentially setting up for a period of easy monetary policy. And that's what's been,
Oh,
by the way.
not if you listen to Jerome. He wants to know he's not cutting yet, but go on.
To Powell. Yeah, no, but I think that's what the gold market has been kind of sniffing out. And I think that's what Bitcoin investors are kind of sniffing out. This is where these, stable store of value, supply constrained store of value, kind of monetary commodities, this is where they thrive. So Bitcoin is once again passing another test and proving its resilience. And that's also extending to MicroStrategy, or strategy as it's now called, which we just mentioned, which is actually, I think, up a little bit for the year.
Some of the viewers and Don quite spirited on this. I'll let Don jump into the conversation, saying, well, his view is that Bitcoin is being propped up by Russian sanctions demand for crypto, and I don't disagree with that. But I guess I also, in fact, I kind of wholly agree with that, and I think there's going to be more of that to come, because in this sort of new world order, if the U.S. doesn't like you, we tariff you, we sanction you, we don't do business with you. So why would you be buying U.S. Treasuries in that environment? Again, like I still own U.S. I own a lot of U.S. Treasuries, and I'm buying more U.S. Treasuries, even with rates lower, because that's where I park my money to keep it safe. One of the places. But if I'm Russian, I don't know if I'm doing that. And China as well, right? So I think that all of these countries are going to look around and say, where can I put money? Gold is one of those assets. So some of the fundamental reasons why you've seen this uptick in gold, and we were talking about this the other day, it's actually outperformed the S&P. It's unbelievable, right? For a 20-year time horizon, incredible. But part of that is the demand from central banks. And I think Bitcoin is similar in that you will, so as much as Don is saying, oh, it's being propped up, I think that that's kind of going to continue, and that actually leads to a bullish case for this asset class. What do you think?
Well, what's happening here geopolitically is we're getting sort of a fragmentation of like the international trading system, right? And that's why gold is performing well, and that's why a decentralized, non-sovereign, monetary asset like Bitcoin is attracting interest, and from people all over the world. As they're losing interest clearly in U.S. equities, and they're seeing it as a viable store of value. So, as kind of this kind of interconnected system is sort of trending towards disintegration. These non-sovereign, supply constrained assets are looking more appealing. We mentioned MicroStrategy, and just on that, a security that I think is kind of interesting in this context is that preferred offering, that preferred stock deal that they launched a few months ago. We wrote about that at the 76 report. If anyone wanted to kind of take a deep dive on that, but it's
that's actually really interesting,
well.
and not to get too technical on people, but STRK, right? And Rob has done a ton of due diligence on STRK, and he's like, Sailor's paying that dividend no matter what. Like, no matter what, he's going to still pay his dividend. But if he doesn't pay it, you wind up with more equity in the company. Walk us through that investment, just because it's kind of fascinating, and it's a little wonky. Full disclosure, but I think we get some wonky folks on the watching right now. They kind of like this because we get some Bitcoin bears and bulls. So you guys will appreciate this.
It's a very unique security, and I mean, I think the first thing is it's offering about a 9% dividend yield that pays quarterly, right? So it's very high yield, and basically it can convert into strategy stock at any time, but it goes in the money, so to speak, once strategy goes to 1,000. But there's no expiration date on that. So strategy is about 300 right now. So in the future, if Bitcoin really goes up and strategy stock really goes up, you then can convert to strategy stock, and then you kind of participate in all that upside. But if that doesn't happen, you just collect that 9% dividend yield, which is very high and in line with like an overall stock market, a good return for the stock market in general. And that goes on forever, so long as strategy is solvent and pays this dividend, right? So the risk on this is is there some sort of collapse in Bitcoin that will, destroy the company? And that's what you're underwriting. You're bearing that risk.
You're bearing that risk. And that actually held up amazingly well too. But here's my next question. And we don't really know the answer to this, but we're just throwing this out there because, you got to think about all these things as an investor. And I get that, some people think we haven't hit the bottom. Okay, so be it. At what point, and if you listen to, say, like the real bears of the world, they're like, okay, they're terrified, but they're always terrified. Keep that in mind. I mean, Peter Schiff, they had him on Newsmax the other day, and I came on, they played some sound for me, and I'm like, okay, he's not wrong, but like, just realize that that's always what he believes. Like, this guy is always falling. And so you have to, as an investor, I think, still recognize that you got to put money to work, and you got to pick your times. You can't just be short the market forever, or you're going to lose out on all the upside that you could have possibly gained. So with that in mind, we still have to think about these downturns that could come. And my fear, having been through 2008, is always that liquidity crunch and that crisis that sort of threatens to break the buck, right? Like in the money markets, or just some kind of liquidity crisis that causes a systemic financial risk. The good news is, and believe me, these are things that I think about at night. Like, I could not sleep on Thursday night because all of this is going through my head, even as I'm buying, right? Everything goes through my head, and I'm like, okay, Trish, 2008. And like, fortunately, like, I've been through a lot. You've been through a lot. You've been on the front lines. You were investing billions of dollars. I was on the front lines talking about all these things. My husband actually worked at Lehman Brothers, not in the section that took the bank down, but like, I've been through it, okay? Like, through it and back, and lived to tell the tale, which actually is very valuable, I think, in moments like this, because I'm telling, my son who's trying to learn a little bit on the edges, I'm like, okay, so this is what happens. And you just kind of, you have to know, I'm willing to risk this. I'm willing to lose this. Yeah. I just know that, it's not that I really want to lose it, but I do think that in 10 years' time or 5 years' time or whatever it may be, we're going to be in a better position than we are today. Liquidity, sort of financial systemic crisis type things, though, that's like a whole different ballgame. And one of the things that people have talked about is, at that point, is that something that breaks Bitcoin? Because at what point are you going to, I think it could break a lot of the crypto market. You might see some of those others, because the one thing you're going to hold on to is your Bitcoin. In a time of crisis, you might get rid of all the other cryptos that you have, that, you look at Ethereum and the challenges that Ethereum's had, but you're probably going to hang on to your asset that you prize the most. But at what point do things start to shift? Are we at risk of a financial crisis a la what we saw in 2008? I don't think so, but and I've been through 2008, and I worry about these things. I really do. I think this is a little bit different, but I'm curious to get your thought on that too.
Yeah. So this is how these things really spin out of control. And even if you go back to 2020, when we were, testing the bottoms by March 23rd, 2020, what was going on there was the credit markets were blowing up. Investment grade bonds that was actually the best buy you could have at that point, because they were like these, Microsoft bonds were trading at 8% yields, while U.S. Treasuries for long-term debt, while U.S. Treasuries were at like 1%. So there were tremendous opportunities. It was causing distortions in the market. There was all this dislocation. I
had some friends, by the way, who made a ton of money shorting that market going into it. But then they were stuck on that trade, right? Like, they didn't understand, because they were such bears, and they were proven right in 2008. And they didn't understand how to be nimble enough to come back out and then still go long America, because even as bad as that was, eventually you come out. Continue.
Well, I would just on the liquidity point, the risk that we have, whenever you have a financial crisis or a market crisis, it can kind of metastasize into something worse. Financial institutions run into, I think we're already, we're hearing kind of indications of that, on Thursday and Friday, this caught so many hedge funds and whatnot off guard that, you do kind of have like liquidity driven selling. And that's why you have these like violent moves. So that could snowball. But what's interesting is, it's somewhat, as an investor, you want to kind of patiently sort of put capital to work if you're trying to take advantage of this downturn. But if the reason people are selling is because they have to, or because the logistics of the money they manage are sort of like forcing them to sell, or they're getting margin calls. They're not selling because the securities they own aren't worth what they're worth. They're selling they're forced sellers. And
right. But at some point, it's like, you're pushing on the system. Yeah. At some point, the system can only absorb so much risk. And then you've got real chaos on your hands. I'm thinking TARP style chaos, right?
Well, but let's just take a step back too, and like assess what's going on here and compare it maybe to some of these other crises.
Okay.
I mean, in 2008, like it was really chaotic because we had banks going under with counterparty risk and all of these overlapping derivatives trades that was it threatened to bring the whole financial system down. Mm-hmm. That was clearly existential. Okay. And then in 2020, as the next big crisis, we had this virus. Everyone was going around catastrophizing how bad it was. I was getting into, debates with colleagues about this. Do you remember that, what was it, what was that study that came out that basically said everyone was going to die? The Imperial College of London and everyone on Wall Street was buying into this, that the death rates would have been, like 1 in 4 of us were right. And the economy was going to go the worst case scenarios were just being taken very seriously, despite a lack of real evidence. So, this is what goes on in times like these.
And so you got to keep a clear head. Yeah. I remember, thinking that, and actually I was investing pretty heavily at some point, 2 weeks into the craziness. Fox was like, bye-bye. And suddenly I was like, wait, I don't have a job anymore. And that's when my sudden willingness to keep on investing kind of grinded to a halt, which is crazy of me because actually, I had a tremendous year because I was actually under contract, so they really couldn't fire me and they had to still pay me, et cetera. And then I wound up taking another position that was helpful. And, as the world opened back up, my speaking business kind of took off and I had all that time to kind of put my podcast together. However, the one regret that I have is at some point, and I get it, when it hits home, right? If all of a sudden, recessions, theoretically, you can sit there and say, oh, recession, maybe it's time for a recession. We get all this inflation, this, that, and the other. And then all of a sudden, your neighbor loses your job, right? And then you lose your job. Those things actually catch up with people. And so I'm sort of living proof in that moment, thinking, okay, well, I can keep investing here. And then at some point thinking, wow, oh no, the world really is kind of coming to a halt because, there was a personal involvement there. But that's sort of my, full disclosure, it's one of my big regrets. I invested heavily, but maybe not heavily enough at that time. And I think that you can't be gripped by fear. You have to have sort of calm, cool, collected head about you. Sure, you got to recognize you may lose money in the near term, but ultimately, unless you just want to bet that the world is going down forever, I've got to assume that, as we have population growth and things keep moving and we get some tremendous technology with some tremendous AI, we're moving forward. Okay, the train has left the station and, there's going to be blips along the way, but it's not going to slow the pace of progress, which means, yes, ultimately you come out on the other side, you're ahead of the game.
Well, let's also, just when we contrast it to those two crises, let's just what's going on today. This is not an external crisis. This is Donald Trump has unveiled a tariff schedule, okay, that was higher than what people were hoping, and there's some big numbers out there. And the conclusion people are drawing is that this is basically going to lead to global economic catastrophe. But let's be reasonable here. I mean, if the stock market does fall another 10%, 20%, do we think he's going to stick with, these very high tariff rates?
No, the point of because that's, he is darn flexible. That's what people don't actually realize about him. He's really flexible. And if he realizes that this is just not, and he wants what's best, I mean this, he really does want what's best for America. So I think if this doesn't go well, he's going to turn it on its head and he's going to turn around and say, okay, well, and he'll come up with a great way to present it, of course. But he's not stuck in his ways. I mean,
I think he
heck,
wants-
he invited Bill Maher to the White House for dinner. Like, he's not stuck in his ways.
I think he has said, and he's proud of his, how the stock market performed under his first term. And he's not beholden to the stock market. He's going to do his policies, but, he's not going to want to be the president of the United States while there's a complete stock market meltdown, economic catastrophe, massive
He said
recession,
that. He said, I don't want to be Herbert Hoover.
Yeah, I mean, it's sort of like defeating the whole point of the tariffs in the first place, which is supposed to be to rejuvenate industry and create American jobs. So a recession doesn't accomplish that. I think people just need to put in perspective what we're talking about here with these tariffs are effective taxes being imposed on. It's like a sales tax on imported goods that has the potential to raise a few $100 billion a year of revenue. Against the backdrop of a 30 trillion plus economy. We collect $4.25 trillion a year of federal tax revenue in the first place. The actual impact of these tariffs, they could be bad policy. We could have that debate, but there's a limit to how much damage they can really do.
You know what I do like? Let me see if I have the sound. Dun, dun, dun. You know what I do like? I like, you ready for this? The XRS. Check it out. Donald Trump introducing the gold card. Drum roll, please.
$5 million. For $5 million, this could be yours. That was the first of the cards. And then, you know what that card is?
Gold card.
It's the gold card. The Trump card, gold card.
Who's the first buyer?
Me.
Who's the second?
I don't know, but I'm the first buyer. It'll be out in about less than 2 weeks, probably. Pretty exciting, right?
Yes, very, very exciting. I mean, the XRS, I'm telling you, they might be onto something right there. Let me play you one more bit of sound, Rob, and the viewers who are watching. I like the sound of this because Lutnick is all over it, and by the way, why not find opportunities to create revenue? I'd rather see lower taxes, and we're talking carrots, right, as opposed to sticks here. $5 million a coin. Listen to Howard.
About 2 weeks from today, it goes out. Okay, Elon's building me the software right now.
Yeah.
Right, and then out it goes. And by the way, yesterday I sold 1,000.
Oh, you did? I got a poly market I created on how many are you guys going to sell this year. So
Cool.
Curious to see how many.
That's fantastic. Do you want to tell people just the rough?
Yeah, what are the terms on
Okay.
it? Yeah.
So if you're a U.S. citizen, you pay global tax.
Yeah.
Okay, so you're not going to bring in outsiders going to come in to pay global tax. So if you have a green card, which used to be a green card, now gold card, you're a permanent resident of America. You can be a citizen, but you don't have to be. And none of them are going to choose to be. What they're going to do is they're going to have the right to be in America. They pay $5 million, and they have the right to be in America. They have the right to be in America.
Permanent residency.
As long as they're good people.
And they're vetted.
And they're vetted. Yeah. And they can't break the law. We can always take it away if they're evil or mean or bad or something. Not mean, but if they do something horrible, you can take it away. Right? But the idea is, if I was not American and I lived in any other country, I would buy 6. One for me, one for my wife and my 4 kids, because God forbid something happens. I want to be able to go to America, and I want to have the right to go to the airport, to go to America, and them to say, hello, Mr. Lutnick. Hello, Mr. Lutnick and the Lutnick family. Welcome home.
Right.
That's what I want to hear. I don't want to hear I can't come here when there's a horrible war, a horrible whatever.
Right.
I want to be able to go home. Right? And once I'm home, I might as well build a business.
Yeah.
So you have the most productive people in the world going to start spending time here. They're going to have a family office. They're going to hire some people.
And you're not going to tax their external worldwide income.
I only tax the money they make in America, which is what we do now.
Yeah.
But their global income stays out.
And they pay $5 million. And how many people do you think there are that could qualify in the world?
There are 37 million people in the world who are capable of buying the card.
That's
in case you were wondering.
37 million. Wow. That's a lot more than ChatGPT told me.
Who are capable of buying it.
Who are capable of buying it.
Now, I'm not saying they will, but they're capable of buying.
Holy moly. Okay, so 37 million people possibly buying into this. I mean, I think those numbers are a bit inflated, in fairness. But they're talking about the number of people that could possibly afford it. Gosh, I mean, you could like pay off your national debt, like, and then some, right? I mean, like 5 times over.
Yeah, I think we were playing with the numbers. It was like if 37 million people actually paid $5 million for the card, you'd pay off the national debt like 5x, right? 5 times over. I don't know that there's 37 million people with $5 million to spend on a gold card, but no, it could be a substantial revenue generator that could make a dent in the national debt. Yeah. I really prefer when the administration is focused on these kind of creative solutions, like they've talked about liberating the asset side of the federal government's balance sheet, which I think also involves not just kind of selling citizenship rights, but also some of these natural, resources and concessions. And, the government owns a lot of property, and there's a lot of clever things that they can do. That's a better way, to generate revenue and to sort of advance the MAGA agenda than I think, necessarily picking on poor Vietnam, and threatening them with.
Didn't Vietnam come around? Did they say, okay, we'll go to zero? Hey, I'm looking at Don's comment. I just added it to the screen. He said, Malta and other countries thrive thanks to similar policy. True. And he's mentioning Switzerland as well. Switzerland's really interesting because you can negotiate your tax rate in Switzerland if you decide to go and live there. You literally, it's a negotiation. I have a very wealthy friend who wound up living there for a couple of years. He actually wasn't becoming a citizen, but he was Canadian. And so like many, hundreds of millions, many hundreds of millions of dollars. And so he negotiated his tax rate with Switzerland. And it's like, okay, so other countries are actually thinking about, okay, how do we recruit wealthy people and bring their money in? And they're doing it in strategic, creative ways. Malta, as Don said, is one of them. And I think you get like access to the EU through Malta, right? You get that EU passport. And last I checked, I have a friend who knows this. I've had this whole conversation with a good friend of mine because she helped secure this for one of the boss's girlfriends. Like in all seriousness, it was like $2 million hedge fund. But we'll leave it at that. But apparently, that is a way of generating revenue from Malta. And hey, I'd rather have a U.S. passport optionality than Malta. So these are creative kinds of things that they can and I think will do. So it's focused now. And frankly, like nobody ever focused on that. Nobody even thought of it before.
Yeah, no, it's, and they are creative. We'll give them that. And I guess they showed some creativity with the tariff reciprocity formula. The creativity this time wasn't as helpful to markets. But I think there's, we need to kind of stay focused on why there was the original enthusiasm around the MAGA economic agenda. Instead of getting too far down the path of trade wars and tariffs, think about what we need to do with AI and to, build out the electric grid and to support, deregulate, right? I mean, that's what's really exciting. If you want to bring industry and manufacturing back to the United States and technology, we do it through deregulation by making our businesses more competitive, by investing in, necessary energy infrastructure. So there's really a lot of levers to bring about this industrial renaissance beyond.
What we're doing. Well, I'm going to let you go enjoy your Saturday night. I'm getting together with friends tonight, and one of them actually works for one of these pharmaceutical companies. So I'm gonna get the lowdown on just exactly how Big Pharma is going to respond to all of this. Look, I think there's like a state of panic out there. But again, my message, and I think your message, and our message at 76 Research has been really clear. You guys, if you haven't signed up for the newsletter, go get it. I'm putting the link here. And the newsletter itself is just $1 a month for the first 2 months. Go to 76research.com. If you can't swing $1 a month, I don't know what to tell you, but you can get the free version at investinmaga.com. But I do encourage everybody to take a look at those terrific portfolios we have that have been beating the S&P. And it's funny because my husband was looking to buy some dividend stocks actually as everything was getting beaten down. And a lot of what he wanted actually was already in our income builder portfolio. So he got a kick out of that. And I was like, listen, honey, like we got it covered. Anyway.
Well, and we should, Trish, we talked a lot about tech, but I mean, I think there's really opportunities sort of across industries at this point, across the portfolio. A lot of, there's fairly indiscriminate selling, and some of these businesses are pretty well positioned and have pretty secure earning streams, even if there is some kind of macroeconomic pressure. So, it's a good, moments like this. These are the opportunities that stock pickers, kind of don't dream about. You never want a crisis, but when they arrive, you take advantage and you reposition, and there's a lot that can be done.
A lot of people were waiting for this moment. A lot of people that didn't like Trump were waiting for this moment. We'll see if they take advantage of this moment in the here and now. I'm not saying it's all going to happen on Monday, but there could be more legs down. It often happens in any of these bear markets, which I guess we're at least in correction territory. I don't know if you'd call it a bear market just yet.
I think you need to be down 20, but
it could happen, right? We're pretty darn close. So again, you can't time these things, but know that in the long run, historically, and you can go back to really the beginning of the stock market itself, these things do pay off in the long run. So Rob, we'll leave everybody with that little bit of information. I encourage them all to go to 76 Research, use code word dollar, go look at those model portfolios, start thinking about this, sharpen your pencils, guys, because it's going to be quite a week and you want to be positioned in this environment. Rob, have a good one. I'll talk to you Monday.
See you later.